Hi, Vieira with stockmarketlive.tv. Today I'm going to offer you this lesson on technical analysis, how to invest in Mobileye. It is one of the companies that we have been discussing here since IPO, and I'm going to use this opportunity to issue a live market call since I consider it relevant. So I'm going to do this in real time, and I hope that you follow up in this process, which is very important to understand how things they are done in real time. Also, I'm going to address a bit of the past history in Mobileye, but not everything, just the midterm or the most recent alerts, which in fact you have on the live blog on the company. So I'm going also here to use one of the tools that is very common to Zoom in order to help you to visualize better these charts. So I'm going to utilize the current chart shared with the subscribers, and this is the one, as well as the previous one. So this chart, I repeat, it is available in the lesson, as well as it refers to the past history, which is very important. So in Mobileye, we downgraded shares to strong sell at $50. We published it live on the blog of the company, and the share price collapsed down to $35. Well, it happens at $35. We consider that, let's say, the ratio upside downside does not justify to maintain a short position. And so we recommended here in real time to close the short position in Mobileye as of today at average price $35. And this is current with regards to our former rating, strong buy in Mobileye, also issued during the course of 2016 within the range $25 to $28. So when I upgraded Mobileye to strong buy within that range, shares they rallied to $50. When the shares they were at $50, we downgraded to strong sell, while stock analysts they raised the targets to $60 and $60 plus. And I said it is not time for Mobileye to continue rallying. In my opinion, you should sell and you should go short the stock. That was the single best thing to do, obviously. As of today, you see shares at $35, and when we issued the live market call downgrading to strong sell at $50, we created live a negative divergence. That is precisely the objective of this lesson that you are going to have here today. So I'm going to position myself in order for you to visualize the chart. And then I'm going to explain it in detail, okay? So also I'm going to remove this here, if you, I believe this is better. And I'm going here to zoom, all right? So today you have it here, 1% of the short position closed at $35. So we consider that going forward there is not an advantage maintaining a short position in Mobileye, and in fact I have customers who they bought shares of Mobileye at current prices. Therefore, I agree that Mobileye might be very well a buying opportunity, which I'm going here also to explain going into 2017. But before I proceed, I'm going also here to show you the upgrade to strong buy, $25 to $28, okay? This, it was a very important call when no one believed, in fact, in Mobileye, when shares they collapsed, and ahead of this collapse in Mobileye, we had the strong sell rating, so shares they collapsed, and then for several months, shares they rallied, as you can see, all right? And then on a kind of, quadruple top, you can see here, a quadruple top around the $50 level, we downgraded shares of Mobileye to strong sell. Bear in mind that the downgrade to strong sell didn't occur here, but it was the first time that shares they traded to $50, okay? So this to say that everyone in the service, and even non-subscribers, they had the opportunity to sell short Mobileye at $50 and higher, okay? Because our upside on Mobileye, I was very clear saying that it was around $50 to 52, okay? That was our most bullish upside scenario for Mobileye, okay? So thereafter you see here a downtrend, and finally the close short position at $35, which it is not the recent bottom since shares they trade below $34, okay? Now we are going to start, or we are going to enter the technical analysis lesson, since this is a live lesson, all right? In first place, you notice here the negative divergence, okay? So the negative divergence, it is given by this on this technical indicator. It is one of the technical indicators I often refer to in my lessons on technical analysis and also on live trading, the relative strength index. And negative divergence, it is very explicit, very clear. Moreover, we are not talking about a simple negative divergence, we are talking about a double negative divergence. And when you have a double negative divergence, the probability for you to make money on long side, it is by far less compared to the short side. And when you have a double negative divergence, it is precisely when you should sell your position, in this case the long position, and even to reverse the short side. That was precisely my call, downgrading to strong sell Mobileye and creating that stock pivot so important, the $50, okay? So I'm going to remove here the zoom, so you have here the downgrade to strong sell, all right, $50. And if you draw a line, a vertical line, all right, through this pivot, the $50 all the way down, okay, you are going to notice that is precisely coincident with the negative divergence that we created live. So what differentiates us from everyone else is that we create these stock pivots in real time, all right? So having said this, and this is other example of a negative divergence, therefore opportunity for you to sell. You didn't have to sell the first time that Mobileye touched $50, but you had to sell the second time or the third or the fourth time that Mobileye failed to break $50, closing above that price, okay? That was the test, and by failing the test, Mobileye obviously then reversed, and everyone dumped shares and created this downtrend leg all the way down to $34, all right? So what happens here, my reason to upgrade Mobileye and to close the short positions, it can be seen here as of December, therefore the final days of the year 2016, we can see here a double positive divergence, okay? So since we have here a double positive divergence, it is time to close short positions and eventually to reverse to long side. So I repeat, we don't no longer have a short position going forward in Mobileye as of today, and instead we have team members with long positions, also customers with long positions on Mobileye, okay? So bear in mind, double negative divergence, sell the stock, going short, on confirmation of failure to break to the upside, and then at $35, covering the short position on a double positive divergence and going long the stock. You are not obliged to go long the stock, but the objective of the lesson is to explain in detail, very clear, the value of the positive divergence and negative divergence explained here in detail, live on the tape, okay? So you have here a positive divergence and a live trade call alert to close 1% of your short position in Mobileye at $35, and our upgrade to buy going forward with, that is to say, going in 2017. And obviously, this also, it has been done according to our methodology, in the sense that the more you make, the more you can make. That is to say, since you have been accumulating profits according to the methodology, and you have to refer to the existing methodology in the trading course. In the end, it does not matter whether the bottom is going to be 35 or $30. You have plenty of profits to close your short position and to reverse to the long side. Myself, I bought Mobileye, if that pleases you to listen to. So also I'm going to refer here to the previous live chart, okay, which is available here. And this one, it is very clear. So we had a strong buy rating in Mobileye that ranged 25 to 28. Then we sold the stock. This to explain how did we invest in Mobileye between the strong buy rating and then the strong sell rating. Then we sold short the stock at $40.40. Shares, they came down to $35.60. Okay, so notice that $35.60 several months ago, it was the price where we reiterated the strong buy rating in Mobileye. So basically the same as we are doing today when we are saying close the short positions in Mobileye, reverse into long side. Thereafter, the share price or the momentum responded very well. We assumed the triple long position at $41 on a breakout, and then we got the $50, and by having those $50, we sold the stock with a very large profit, downgrading to strong sell. Okay, so this is the story with regards to Mobileye. I've been very explicit in this lesson, and I wish you good luck going forward in Mobileye. I think this is other example of a live market call, terrific lesson, and I hope that you profit from it in the future, and thank you very much for attending it. And I'm going here obviously to come back and to say bye-bye. All right, thank you.